Musk Elon, the man who never fails to astonish, has a few surprises up his sleeve, including groundbreaking discoveries and astounding revelations. We're delving deep into the world of Tesla today. There's a flurry of exciting news surrounding Tesla stocks, and we have some electrifying stories to share with all of you Tesla stock investors out there. This is a day to remember, but that's not all. We also have the most recent information on the company's stock performance, industry insights, and a preview of what lies ahead for this automotive behemoth. With that said, let's get this video started. First up, let's talk about Elon Musk has released a bombshell of optimism that is enough to make any long-term investor jump for joy. He sees Tesla as the ultimate game changer, with a trajectory aimed at becoming the most valuable company in the world and raking in a staggering $1 trillion in profits annually. That number alone is enough to make anyone's head spin. This development left even the most seasoned Tesla investors stunned. What's really amazing is that Elon Musk means what he says when he says something like this. He doesn't just say it for effect. Elon's sincerity is evident despite the fact that others might make up attractive numbers to please investors and staff. The key question is whether he can actually make this grand vision a reality, but here's the really exciting part. As a longtime Tesla investor who jumped on board back in 2019 when the numbers were well below 1 million, we believe that the growth train is far from slowing down. Wall Street may have its predictions, but we believe that Tesla isn't just building cars, they're building a revolution. As we look at the automotive landscape, a stark contrast emerges as legacy auto giants like GM and Stellantis find themselves competing in the new arena. What makes Tesla unique is Elon Musk's unwavering commitment to push boundaries and take risks, not resting on previous victories but pushing forward to conquer the next level of the game. Presently, Tesla is accomplishing the remarkable achievement of creating a new vehicle every 3.5 minutes, not only locally but globally as well. A speed that causes the opposition to choke from their own inertia's dust. What's especially fascinating are the opportunities that were lost a decade ago. Legacy automakers had a clear opportunity to seize the electric vehicle revolution as technology was developing and the world was slowly moving toward a sustainable future. But they chose a different route and hesitated to stay in the game. Tethered to their traditional gas-guzzling models and let the opportunity slip through their fingers, now they find themselves struggling to catch up with Tesla, a company that not only embraced the EV transition but accelerated it. The consequences of those choices are unfolding before our eyes, and the question looms: can legacy automakers adapt quickly enough to remain relevant in a rapidly changing automotive landscape, or will they be left behind in Tesla's trailblazing wake? Meanwhile, Tesla is rewriting the rules of the game and setting new records at every turn. It's all eyes on these legacy automakers, and honestly, I can't muster up an ounce of sympathy for giants like Ford, GM, and Stellantis, but there's a tinge of sadness for the hardworking employees caught up in this mess. Sadly, many may end up losing their jobs because these companies couldn't navigate the transition successfully. It's a stark reminder of how detrimental the UAW situation can be, not just for Ford but for all automakers trying to stay afloat. The UAW proposal, if implemented, would send Ford's UAW-related labor costs soaring, effectively doubling what they are now, and guess what, they're already significantly higher than Tesla. The UAW may call for further strikes this week, and things aren't looking good for GM and Toyota, among other foreign manufacturers who depend on non-union workers in the US. Here is some financial insight regarding Ford and Stellantis. UBS increased its target price for Tesla stock to $1,290 from $270. The reason for this change is that Tesla's pricing strategy, lower prices, might provide them with a murderer competitive edge and aid in growing their clientele. Even though this could momentarily have an impact on Tesla's profitability, Wall Street appears to be realizing that, despite UBS's neutral rating, there is still some short-term upside potential in Tesla stock. UBS's projections are astounding. They predict that Tesla's unit sales will grow by about 22% in 2024, reaching approximately 2.3 million units, and that growth will continue in 2025, reaching approximately 3.25 million units sold. But here's the kicker: experts believe that Tesla's delivery growth in 2026 will defy expectations, especially with their next-generation vehicle scaling up. This will be a game changer, so potential investors may be eyeing an entry point, but keep in mind that trying to time the market is like chasing shadows. Avoid missing out on the upcoming significant Tesla rally, even though UBS may advise delaying for a more favorable entry opportunity. When it comes to investing, there are times when it's preferable to get in immediately rather than waiting to see if the market improves. With Tesla, the future is bright, so buckle up, keep your eyes on the road, and embark with us on this amazing journey. It's great news for Tesla stockholders that price reductions have stabilized as of August 2023, but not so great news for those looking for a deal. It's a bit of a puzzle though, because if UBS believes there might be a more favorable entry point, then why are they suggesting that prices have stabilized? Let's figure that out. Tesla's capacity expansions and past facility ramp-up rates have been thoroughly examined by UBS. Their results indicate that matching. If supply cannot keep up with demand, pricing may limit growth in the medium future. But here's the strategic twist according to UBS. Tesla will keep experimenting with price elasticity, or fine-tuning pricing based on supply and demand dynamics. While this short-term strategy may cause some people to scoff, it may be the cornerstone of Tesla's long-term success because by cultivating a sizable customer base and winning their loyalty, they can put pressure on rivals who have more expensive battery electric vehicle cost structures. Let's now turn our attention to an important development. Thailand is home to Tesla's first Experience Center. This is the big reveal, but I really like the name Experience Center. Since it's more than just a showroom, it's an immersive experience for prospective Tesla owners and a crucial step for investors and stockholders alike, demonstrating Tesla's global development and commitment to the Asian market. It may not seem like a major concern, but the Chinese government is reportedly pressuring manufacturers of electric vehicles to use domestically produced electrical components, including semiconductors. This goes against their high-level opening up mantra and might have serious consequences. If this is true and word spreads, do you believe other nations will gladly welcome Chinese automobiles with wide arms? Tariffs and trade wars may not become the norm, but there is a bright side for Tesla. In order to weather these storms, Tesla already intends to produce cars on every continent. It's important to note that this directive to use domestic parts was given verbally during a meeting that took place approximately a year ago, and there is no paper trail. China appears to have played this cunningly by avoiding direct evidence that foreign businesses are not included. Although it is a calculated move, it may not sit well with other countries in the long run. Keep in mind the recent story about the European Union wanting to look into Chinese EV subsidies and possibly impose tariffs on Chinese cars. It's possible that these two stories are related and that this is all part of a larger chess game in the global automotive industry. The consequences of Chinese companies actively competing in the EV parts production arena could have an impact on the global economy and job market. On the one hand, as European and Japanese manufacturers may lose their international competitiveness. But for now, that's all we have for this video, guys. We've covered some exciting updates, like Tesla's pricing strategies, global competition, and even a peek into the world of short selling. We also looked at Elon Musk's position on free speech and how it relates to X's policies. This kind of publicity is invaluable for Tesla and helps generate more interest in its products. Here are some questions for you. Do you think that supporters of Tesla will continue to hold their positions, or will they shift their opinions? Please share your opinions in the comments section below. If you enjoyed this video and would like to hear from you about how to strike a balance between free speech and following local laws on social media platforms like X. Additionally, what direction do you think Tesla stock will go in the upcoming years? Thank you for watching, and remember that the next video you should watch is the one that piques your interest the most. We hope to see you again.